we've seen so many measures taken by the government to boost growth, and India is a growth market. This slowdown in growth likely also one of the factors that's weighing on markets in India, and a large contributor to that is FIIs. Does the FII picture change or the viewpoint change as a result of all of these measures that the government has taken, both on growth as well as on Indian markets?
Well, if you look at the cross-section of views out there, the answer would be yes. I mean, if you think about, cross-section of FII views around the market going back 6-9 months, you could see quite a few, very vocal sort of pessimists. I think today we've seen less of that. But I think it'll always be a combination of the two factors. I think it's about the absolute story to say, look, are those sort of policy stimulus measures likely to pay off? I think the fact that we've got quite a few already, means that we've gone through a period of fairly subdued earnings, means the outlook starts to look a little bit better. Of course, we'd all be happier with slightly more inexpensive valuations. And then there's a relative picture, right? To more of as FI flows in relative terms flow to India or elsewhere in Asia. So there are two-step sort of process there. I think when you think about FI flows in absolute terms, I think I'd come back to the dollar, because that still is one of the biggest determinants. Because even in an underweight or a neutral scenario, you could argue that Indian equity should still benefit in a weak dollar from some FI flows, even if a larger share go elsewhere. But without that sort of weak dollar, it's quite hard to sort of make a case for strong FI flows, regardless of the view on the domestic economy. The only good point I'd say is that yes, I think we've been through some weakness, we've got a lot of policy measures. That's why we're also retaining our overweight on Indian equities domestically, because we do think there's enough there now, as long as we just get less bad news, to deliver outperformance versus bonds and cash.